Hello, everybody. Sorry, I got mic problems this morning. It's not working very well. How's everybody doing? Morning, David. For some reason, every now and again you get this update. I've got this Logitech thing, basically. This thing. And every now and again it updates. And every time, without fail, it updates. It doesn't work. It just breaks. Everything breaks. So, sorry about that. Bit late this morning. I'm here. How are we all doing? So I'm just getting some stuff reorganized. Oh, not that way. There we go. Let's pop that there, put that there. Stick that over there. Put that down there. Done that. Brilliant. Right. How is everybody? Sorry, I'm here now. Morning, Harshal. Morning, John. Morning, Jacob. Morning, Anna. Morning, Gable. Morning, Kennelly. Morning, David again. Where can we get the market structure sweatshirt? On the line. If you go to, not there, not there. If you go just on the YouTube channel, just look down below your live stream. Weird. Weird. Where's all that gone? Where's everything gone? Where's the chat and everything gone? There you go. So underneath videos, there's a merch store. And you can buy all sorts of things in the merch store. Whoa. Like a t-shirt for a lovely lady. There you go. That's where you get it. Upgrade, downgrade. Guido, morning. Morning, Virginia. Morning, Diamond. Morning, David. Morning, another David. All the Davids are here this morning. Very weird thing going on with the DAX this morning. Had this weird gap up thing at the open. And I was like, oh, every day this week it's done a gap fill. I think I might have a go on this. And literally it just went boing, boom. And then it flew down there. So I've no idea what that was. That's why that's what was reminding me. I was just opening my EA account. I was just going to look at the DAX and see whether it did it. Yeah, it's just a quick move down. So it's just a data issue on my Forex account by the looks of things. Morning, Stevie. Morning, Freeman. Right. So let's have a quick look at the news this morning. Where are we? Friday. We got retail sales 130 for the US dollar, followed by Waller speaking at 145, and then we've got University of Michigan at 3. So nothing particularly impactful after the core retail sales. That's it for news for the week. So that's going to be an interesting one today. We're forecasting a 0.3 miss on retail. We get a positive retail, i.e. anything above a 0, I think we'll have a really good push on the US dollar today. It needs some good news. If it's negative, US dollar's in all sorts of pain at the moment. So we may well get some more pain, as you can see, having to scale out of this US dollar CAD continuously at the moment, because it's literally just collapsing, the US dollar. I'm not quite sure why the market's reacting quite so bad. I think this is more of a trap, to be honest. They're still putting the interest rates up again in May. So I'm not quite sure why it's quite so weak, but we'll see. Could be something to do with this other currency thing that's happening, but I don't know. We'll see. But anyway, so US dollar, big drop down yesterday. So this is 3 days on the trot to the downside. We're due a big bull day now. So hopefully we will see some pullback and a profit take move starting at some point soon. We're extended on the daily look on the US dollar Swiss. Lots of extensions all over the place. Embedded RSIs, all sorts of stuff going on. So yeah, big moves on the US. DAX yesterday, we had a bit of a weird one yesterday. the morning session was a wipeout. Basically, it was just sideways. The whole thing was sideways. This big propulsion gap down here is holding very, very, very well. We did get a breakout of the highs towards end of day and a little rally up. So yeah, not really any movement again on the DAX yesterday. We've still got that upside target in play for the previous day's high. So potential to go either way again on the DAX today. You can't really read it. So we'll see what happens there at the open. Overnight news, wasn't a lot that I could see that was particularly impactful. Just refresh because it's not going back far enough. Bank of Japan's base case is not severe global downturn. That's contrary to everybody else's prediction. So Chinese economic blockade in Taiwan, yeah, knew about that. So that's it. So there's no overnight news, nothing of any interest. Kazakh came out after market yesterday and said don't see any reasons of a slowdown on rate hikes. I wouldn't exclude a 50 basis point hike in May. A lot of the others have come out and said, like Vasil here, will be looking 25 or 50. So it's looking like the entire board of the ECB has agreed on a rate hike for May. It's a case of whether it's 25 or 50. So market is factoring in 25, I think, at the moment. So if we do get that 50, that's going to be a big day for the euro. So still more hikes on the euro, so bullish euro at the moment. But we will see some CPI figures coming through for some eurozone at the moment. So markets open. There's your pre-market 15. We've got no news, obviously, this morning, so we should get some decent movement there. Bella, morning. Gold. First one of the day. Well done. Congratulations. You are today's gold requester. You win a beautiful gold chain. It's a little bracelet. So I'll stick that in the post for you. Email me your address. I'm only joking. I'm not giving my gold away. That's worth $12.99, that. Start off with gold, shall we? While we're watching the DAX. So yeah, it's obviously a US dollar cross. The US dollar is very weak at the moment, therefore it's going up, and it has been going up for days because the US dollar has been going down for days. Big propulsion gap targets to the downside, loads of them. Yeah, much more downside than upside on this. So I'll be looking for a drop when we get some positive US movement. There you go. There's my analysis on gold. Go the other way to the US dollar. DAX has broken out the 15-minute high, straight into yesterday's high. So we'll see what happens on the 5 there. Morning, Neo. Right, so quick recap of yesterday. Let's start off with the ADR reversals. So ADR reversals yesterday did 1.2%. Scaled out of some this morning. 0.3% scaled out this morning. Drawdown control. That's on the euro US dollar look. So there's been 2 drawdown controls done this morning on the euro US dollar. That's been obviously pushing very, very, very hard. Where is euro US dollar? Be at the front probably. It's a major. So yeah, so that initial position there from where was that? That's Tuesday, isn't it? So Tuesday got in on the ADR reversal, scaled out some on Wednesday, scaled out some more this morning, scaled out of some of that. Second position as well this morning. Third position is on. So just looking for that move down basically to exit that. Yeah, so good day yesterday on that one. All the ADRs working out very, very well. A little bit of scaling out this morning. If we get some positive movement, obviously, on the US dollar this afternoon, that will close out in profit. The pound US dollar will also close out in profit. Swiss yen is just sitting there at the moment. So that's pretty good. 4 hours, banked 0.3%, sitting in 2.8 drawdown at the moment. Nothing particularly worrisome there at all. Swiss yen's been not so much worrisome, but Swiss yen's been constantly in drawdown since got into that position because the yen just pushed immediately. So Just sitting on that one at the minute. That's in 0.9. The hedging set file did a measly 0.16 yesterday. Scaled out of 0.17 so far this morning, sitting in 10% of drawdown. So as we know, hedging has always got lots of drawdown, but there's nothing particularly worrisome there either, apart from, again, the Swiss yen. So obviously you wouldn't condone you trading every single pair. Obviously just get into some pairs, not everything. But yeah, Swiss yen's the only thing really that's got any drawdown at the moment to any extent. Again, obviously, because that one's been pushing. And hourly RSIs did a massive 1.3 loss yesterday. I say massive, it's done 8.5% profit this month. So it's comparatively, it's just a little bit of a drawdown. We've got quite a bit that's going to get banked potentially today, sitting there. Euro odd is almost ready for banking as well. So yeah, a little bit of drawdown this morning. That drawdown control has been done again on the Euro US dollar this morning, and US dollar CAD. It's a few bits actually. So, oh yes, 14th, isn't it today? Yeah. So US dollar CAD and Euro US dollar drawdown control on that. But yeah, 1.5 yesterday on those. So DAX 5-minute opening range is just about to go in 10 seconds. So there's your 5-minute opening range. So that's your opening range breakout today. Not particularly big one. And obviously could go either way this. So the fact that we are opening up at the highs and we've just rejected that high, potentially we could get an opening range break short and come back down and retest. But yesterday's price action is a little bit tricky. So you've got this area here which you're immediately going to run into as resistance, previous resistance, which potentially could turn into support. Propulsion gap targets to the downside are in play, so there's a good opportunity for it to drop significantly today as well, but there is obviously the opportunity for it to run up to yesterday's high. So we're bang kind of equidistance between where you would think we could go, so there's no real bullish or bearish bias at the moment on these. So take whatever way the momentum goes. At the moment, momentum looks like it wants to go short. We will see. Right. I haven't got it set up on that VPS. It's on the other VPS. Double bottom at the opening range, so no breakout yet. Right. Morning, Andres. How you doing? Let's get some thumbs up. 62 people. We haven't got 62 thumbs. That'd be weird, wouldn't it? Can you imagine having 62 thumbs? It'd be a nightmare. You wouldn't be able to pick anything up. Right. ADRs, nothing today. It's Friday. Morning, Alex. So Friday basically is end of week, obviously. Your weekly range hits are there. There's no monthlies. So we're pretty much middle of the month, 14th of April, halfway through the month. Nothing has hit its monthly ranges yet. So a little bit lackluster, the price action so far. We've got nothing that's really gone for it this month. Morning, Adam. So we'll see how we get on next week. But if we get some monthly hits next week, those are when you kind of want to start to act on those. But the weeklies, obviously, any of these that are still extended are good opportunities for potentially a pullback and profit take end of week. So we'll quickly run through these and have a quick look at them. US dollar Swiss. Obviously, that is still extended. So this is extended on the, or was extended on the hourly RSI yesterday. It's come out of extension now. Beautiful targets on this to the upside. So we got that. It's not a great propulsion gap, that one, because it's more of a decline and then an acceleration. But this accumulation break there is the nice one, because that actually broke straight through support there. So this is the target I would say we are coming up to. We're going to come up and do this at some point, I would imagine, as well, but that is almost a given. So that's 175 ADR. So you're not going to get there today. It's going to need some hefty old retail to get up there. 175. You never know, could happen. But yeah, that's the move. So that would be probably somewhere into Monday, Tuesday next week. But there's a good looking opportunity for mean reversion there. So there's Monday. Obviously, the drop was down there yesterday. You can see I got into a position there yesterday on the reversal alert. Whoops. So there's the reversal alert there. That was the entry yesterday. New one we just had this morning. And this is kind of the beginning of that propulsion move, but obviously the bigger one is up a little bit higher. So yeah, that's good. US dollar Swiss extended on the weekly. US dollar CAD, massive extension on the weekly. This thing's just been coming down. Yesterday was a big day. What did we get yesterday in the end? 115 off of a 72. So that's nearly 150 ADR, isn't it, roughly? So yeah, big push down there. We've got a reversal alert just going in at the moment on the hourly. Look at the extension on RSI. This is huge. So that's down to 10. Don't get to 10s very often. Very, very rare. So we had one that wasn't even a 10. It was almost a 10 there, which was there. And we had a couple of day push, then the profit take started. So there is potential for it to come back down into this area. We're hitting basically this kind of low at the moment where we may well get a bounce. If we don't get the bounce here, we're going to get the bounce down here. There'll be limit orders triggering. That's ADR today. So if we get negative retail figures today and we get ADR hit, that'll be a lovely entry because this will come back down and be extended again. You will then have divergence on the RSI. You'll have a W pattern on the RSI and you'll have an ADR extension at support, which is the kind of perfect scenario, and then loads of propulsion gap targets. I mean, there's just endless propulsion gap targets to aim for up there, isn't there? So that looks good. Euro US dollar, massive extension to the upside. Got one sell on that at the moment. 83. Just had a reversal alert on that. Do I want to take a manual on that? Hmm. 70 pips. 83 is ADR. I would probably get in that. 56. $72. I'm just going to put a pending sell under there. I'm going to stick a little alert. Actually, I won't stick an alert there. So I'm going to take a manual on that. It's a little bit closer than ADR, but it's one of those ones where it's kind of at the point where you want to get in, but it's not quite technically right. And this is this is why I keep saying about EAs. EAs have got to be used as a tool to help you trade, but you've got to be on top of everything that you're doing, and you've got to be eyeballing stuff. Yeah. So technically, the EA is looking at this going, no, you haven't hit 83 pips. I'm not getting you in. I'm looking at this going, that's a really good spot to get in. It looks like it's stalling. It's at roughly an ADR away from where I was. And we've got this whacking great propulsion gap. We've also got this target down here unfilled. So entering a position here is going to bring the average up above this target, which gives me an exit there and a profit. EA can't do that analysis, can it? So I'm going to take a manual on that and get in basically up there. It's got a lot of potential downside with this. We've just taken out this high as well. So that looks pretty good. So Euro US dollar, that's extended. It's a weekly RSI, weekly range extension as well. Swiss yen, big extension to the upside. In a sell on this at the moment. We've got two positions on this one, looking to target this propulsion gap. There's loads of propulsion gaps to target to the downside, loads. But the Swiss franc, obviously when money runs into safe haven currencies like the Swissy and the yen, when it tends to happen, the Swiss yen is one of those ones that quite often will benefit from it dramatically. So as you can see, it's what's happened in this case. So we've had the reversal on it and the retest. So your your M pattern is in there, looking for a break of that low. As soon as we get a break of that low, we've got to run down. So that looks like a nice one. The reversal was actually yesterday on this one. So there's your 15-minute and retest. But today, all we've done is go sideways. So yen strength potentially on the cards. We had a nice rally on the yen yesterday, undid the whole lot. So we had this big, strong push come in on the yen, and it basically just retraced pretty much, well, not depending on obviously the currency, but it retraced between 50 to 100% of the move for some reason. So it seemed to be some kind of safe haven run. Remember, if you were in the live room yesterday, I said, this looks like a safe haven run because the Swissy pumped at the same time as the yen. However, it all got undone. So it's almost as if someone somewhere had heard something and it turned out to be a rumor, obviously, which is what tends to happen. So, so that started a move. So we'll see if that can get continued today with the Swiss yen and all the other yen pairs. Aussie US is extended on the weekly. That's already rolled over. Got a sell on at that. That's a beautiful double top. Look at that beauty. Absolutely great reaction. That M pattern reversal. Yeah. Massive extension on the RSI in. Target is there. Nice easy short. Need some US dollar strength ideally on that one today. Aussie dollar New Zealand coming down nicely. So this is the one we were looking at for the continuation on the pullback move. So this is just basically double topped at the 72. So we're looking for the next leg to start and challenge that low. Propulsion gap targets to the downside if you want to wait for a propulsion gap target. However, we have got these upside targets as well. That's the worrying thing about this. There's 3 big targets up here, which I can't see being left. So kind of seems like it's got a bit of upside on it. We've had some strength in the Aussie. So tricky one, that. But there's downside targets to fill as well. So it's kind of difficult to read, but Aussie dollar, New Zealand dollar, that's extended. The weekly extension obviously runs from the Monday, so that is the extension. Your reversal alert yesterday was the one to take. I got in on the entry here, didn't get a second. Again, with the EA, that was 72 pips. It's an 82 ADR, so it didn't take an entry on the M5 reversal alert yesterday on that one either. But that would have been a beautiful alert. So the alert would have been triggered on that candle. Where are we? Where's the high? There. Yeah. So that would have been the trigger on that. If I'd have entered that manually yesterday, I'd have actually been out of it yesterday, wouldn't I? With a very nice profit. So that's why you've got to keep your eyeballs on the charts. Right. So there's your weeklies. Do you start with drawdown control when it goes to 1.5 ADR against you? It's up to you. It depends on, there's no right or wrong. Half an ADR, well, not half an ADR, it's too tight. 1 ADR, 1.5 ADR is a good spot. It really depends what your scaling is. So if you're getting into a position and you have said, I'm going to get in 1 ADR apart, yeah. Why do I keep spelling ADR wrong? Getting old. So if you're getting in with the first position and you're saying I want to get in 1 ADR apart, let's say your second position is then going to go in up here. You don't want to necessarily do drawdown control before you get into that second position. So if you set your drawdown control to start at 1 ADR apart, your second position is rarely going to be 1 ADR apart because it's got to push beyond 1 ADR to give you a reversal alert to get you in. So your second position, if you use ADR spacing of 1 ADR, is going to be more just over an ADR or 1.5 ADR or whatever it may be when you get the next reversal alert. So as you can see here, got a long there and took a long there. That is the first scale out. The first scale out is before the second entry. So it's up to you whether you want to scale out before your second entry or whether you want to scale out after your second entry. So you need to adjust it ever so slightly so that the drawdown control starts after your first entry. So if you use 1.5 ADR and you're using 1 ADR, the chances are what's going to happen is you're going to get into a first position. Then after an ADR move, you're going to find a second position somewhere around there. Your drawdown control will be triggered somewhere around there. So what that allows you to do is get into one position, two positions, and give both of those positions a chance to get that pullback and exit. the vast majority of positions tend to be either 1, 2, or 3 trades. So if you set your distance between trades to 1 ADR and you set your drawdown control to 1.5 ADR, what you're doing is you're giving the strategy and giving the EA the opportunity to get you into 2 positions and experience a pullback and get you out in a profit before doing any drawdown control. If it pushes to a third, that has to be a minimum of 2 ADR away from the first position, obviously. It will definitely have done some drawdown control before it takes the third. So you're scaling out a little bit slower. Therefore, you're going to get a slightly more drawdown control. Slightly more drawdown on the position. So there's no right or wrong. I have at the moment on this H1M5 set file, I've got the drawdown control set to 3/4 of an ADR, I think it is. Yeah. So what it's doing on this set file is before it takes the second position, it's getting out of a little bit of the first one. And what that does is it gets the average closer, because you're not only getting in with a slightly larger position on the second entry, you're also reducing the first entry down, meaning that your average gets closer faster. So it's a little bit more of an aggressive drawdown, which means it takes losses. So, looking at the losses that we took yesterday, the reason it's taken 1.5% is because it's doing aggressive drawdown control, not aggressive drawdown control in the fact that we go in with massive position sizing, but it's doing fast drawdown control or swift drawdown control, whatever you want to call it. So it's doing it quickly to keep on top of this. Yeah. But there is no right or wrong. It's totally personal preference. So what I would say is put it in the strategy tester, just pick one pair and try different drawdown distances and different spacings, and just watch it visually playing out and see which you prefer, because this will happen more often if you set your drawdown control lower than your spacing. If you set your drawdown control higher than your spacing, this won't happen anywhere near as much, but that will be bigger. Yeah, there is no perfect. This is the position trading. You're not using a stop loss. Nothing can be perfect in it, can it? Because the market's not perfect. It's an imperfect thing. Therefore, there is no perfect way to trade it. It's a random instrument, isn't it? So, but it's down to you. I'm coming much more over to the camp of I like to get out faster at the moment. I don't know. Maybe it's my age. I just don't like being in drawdown quite as much as I used to. My risk tolerance is, I think, shrinking as I'm getting older. So, but if you're trading on prop, I would say you want to be getting out quicker, because you've got to keep this thing under control. That's the most important thing. So taking small losses along the way means that when the market conditions are good, you're going to absolutely clean up. When the market conditions are slightly less than good, you're going to take a little bit of losses. But, and that's what we're doing, isn't it? We're entering a strategy with an edge into the market, and the edge will play out when the edge plays out. When the edge isn't there, the edge doesn't play out. Same as every strategy. If you just trade literally support resistance, and you play every single support and resistance bounce, if at the time you're doing your support resistance bounce strategy, every single one turns into a breakout, your strategy's not going to have an edge, is it? But other times it's going to have an edge every trade you take. It's the same as every other strategy out there. Position trading's no different. It's just a different way of managing your risk, basically. So you need to decide how to do that. But personal, probably. It's a personal choice. I think because the set files that are set up at the moment. So this is the ADR one. So the ADR one is scaling in half an ADR apart, because it's ADR. We're looking to try and get out quick, so we get in a bit faster, half an ADR apart, and it does drawdown control at 1 ADR. So with this one, we get in with a trade at ADR, short. It pushes up half an ADR. The next reverse alert, we get in, short. If that then plays out, we're done. If it continues to go 1 ADR, we scale out of a third of the first position and we take our third position. So we're scaling out on position 3, because we are saying when you get 1 ADR away from the initial position, start to get rid of some positions, but you have the opportunity to be in 1, 2, potentially 3 positions, where you're being 2 basically, but ready to take your third position by the time you get to that first drawdown control. With the H1 set file, this one is doing it slightly different. So this is getting in 1 ADR apart. So our first entry as a, our first entry as a buy, moved down. So we took a second entry here as a buy. Notice there's no drawdown, there probably is drawdown control done, yeah. And the percentage of ADR for drawdown control is 1 as well. So basically what we're saying is when we get down to here, if I move this out of the way, you'll be able to see it. Okay. So there's your first position. Yeah. There's your second position. So there is your drawdown control. Then we had a push down, and then your reversal alert was there on the second position. So it took off a third of that when it was ready to get into its second. So this is kind of, right, if I'm going to take a second one, I'm going to scale out. That's basically what it's doing. And you're obviously going to scale out quicker doing it that way. So that's the difference between the two. On the 4 hour, the drawdown control is the position entries are half an ADR apart. The drawdown control is 0.75. So we're saying we're going to get in with 1 position long here. It's going to push down. If it goes down half an ADR and gives us a reversal alert, we'll take a second position long. If that doesn't work and we push down, we're going to get out with a third of that position at 0.75 of an ADR. Yeah. And then as we push down again, we can take another position down here. And if that pushes down, that one will then take a drawdown. That one will take a second drawdown at 1.5 ADR. So this one's doing 0.75. So, but the thing you'll notice is not in any of these set files, the drawdown control is usually higher than the spacing, or the same as, not before. But again, there's no right or wrong. That's just the way that this one's set up. These 3 are set up. Because what you don't want to do, don't forget, this strategy is not, the whole purpose of position trading is we can't time the market. No one can time the market. That's the thing that nobody knows. It goes up, it goes down, and it moves through time. When it's going to go up and down, no one can forecast because we can't predict the future. So the whole purpose of this strategy is to scale in when we're expecting a move to happen. If the move happens, fantastic. But we need to give the market time for the move to play out. So if we get in and we get out too fast with drawdown control, you might as well just use a stop loss. So if you scaled out of 30% there, 30% there, and 30% there, why not just put a stop loss there of 100%? It's basically the same as using a stop, isn't it? So we need to give the market at least a couple of positions, give it a couple of ADRs wiggle room up and down to allow the trade to play out. If we get beyond a couple of ADR, then we've probably got a little bit more of a longer term position on our hands. We might have to take 4 or 5 positions on it, 4 or 5 trades on it. So that's when we want to start thinking about, right, I need to make sure my risk is gradually being reduced as we go, because I'm going to start doing aggressive drawdown control. And the more drawdown control you've done along the way, the easier the aggressive drawdown control will be if and when you need to do it, when you get to 5 or 6 positions in. But, like everything, and I'm always very woolly, but I can't be exact on anything because there is no exact. Everybody's different and everybody sees it in a different way. But there's, I mean, look at this. This has done a 0.3 drawdown control. We're sitting in 1% of drawdown. So look at this Swiss yen. So this is a really good example of the Swiss yen. So there's your first entry. there's your second entry. We did one drawdown control there before we got into our second entry. So our average, have I got the break-even line on here? I don't think I've got the break-even line on here. Yeah. So look at where our average is, yeah, between those two. So the distance between from there to there and there to there, obviously that is smaller than that. So and the reason that is smaller than that is because we've taken a slightly larger lot size there, but we've scaled out. So it means our exit is faster. That's the whole purpose of doing drawdown control along the way, which isn't the way I used to do it manually. When I was doing it manually, I never used to do drawdown control at all, unless I'd banked a decent amount of profit, and I'd much prefer to do aggressive drawdown control. But since having the EA built and doing loads of testing, this way is actually more comfortable. And again, it's all about your comfort level, isn't it? So everybody's going to have a different comfort level. So, hello, Hendrik and Barathi. Afternoon. Morning, even. Baggy, morning. Hungover this morning. Oh dear, that's not good. That makes a lot of sense. Tend to hold trades longer without drawdown control, but they get really hit like the Swiss yen and US dollar CAD. You're hurting manual trades. Yeah, see, this is the thing with manual trades. I hate it now. I never used to. I've always been, and you know, if you come in here regularly, I can't bear EAs. All these EAs out there that promise you to make millions, and 99% of EAs out there are utter rubbish and all curve fit crap, basically. And since I built the EA, manual trading, when I traded those Fiddle Crests accounts manually, I found it so hard. You become so used to having everything done with precision and as you want it done perfectly. And when you're trying to do this manually again, it is actually really hard work. I don't know how I managed to do this before I built the EA, to be honest. It's a lot harder. And you know, that's the beauty of the EA. Is something going against me? Fine. I don't have to worry about it. I don't have to worry about stuff that's working. I don't have to worry about it. The EA just puts it in the bank for me. Stuff that isn't working, I don't have to worry about it because the EA scales out of it for me. When something gets onto my radar here at sort of 1.5 to 2%, which there isn't anything anywhere near at the minute, maybe US dollar CAD, then I will start to pay attention. But I don't have to do anything. This is the beauty of it. And if it doesn't work out and the strategy's not working because the market's conditions are wrong, fine. I'm no different to any other trader out there. I take losses. I just don't take them stupidly like everybody else does every time the market moves up and down. That's the difference, isn't it? But the EA scaling in and scaling out for you just really streamlines the whole process. But you know, it is a blunt instrument. The EA is a blunt instrument. Like I just said, with that trade that I'm just taking manually on the Euro US dollar, which I'm not in yet, you've got to sometimes look at it and go, right, well, the EA has been told to get in 82 pips apart. If this now gives a reverse alert on the hourly, I want in. The EA won't get me in. So what the danger is here, by not manually looking at your trades on a regular basis, is this pushes a really nice distance away, not quite enough to trigger an automated entry. And then if I get in here, my average jumps up into there and it gives me a nice easy exit on that gap fill or that gap test there. If I don't get in now and it does that, and then it decides to fly, I'm out. I've got to get into more positions. So we have to hold this for a week or two. This manual entry is the difference between getting out this afternoon on the retail news or getting out some point next week. Whoever knows when. But the EA, if I set the EA to do 0.75 entries, then I'll be looking at it on some pairs and going, oh, if I'd only set it to do a 1 ADR entry, that would have been perfect. There is no perfect, is there? This is trading. This is a random event, and you have to be dynamic and change with it, change with the market. So DAX ORB, Christ, that's a mess. What a mess. So it's an ORB to the upside, ORB to the downside, ORB to the upside. It's an absolute shock fest again today. At the moment, the opens are an utter nightmare at the minute. They're really, really nasty. I'm beginning to think Altro's 5-minute ORB entry is 5-minute pre-market ORB is the way forward. Every single one of those seems to be getting a 1-to-1, 2-to-1 every morning, doesn't it? And every afternoon in the Nasdaq and the Dow. So that candle there, the 5-minute prior to the open, seems to be the one to play at the moment. Everything else is just real chop at the minute. Lots of wicks everywhere this morning. Be careful. He's back. Anna, I lost 400 euros yesterday because I cannot handle losing. Yeah. And this is the whole purpose of position trading. Yeah, the whole purpose of trading this way is you don't have to lose constantly like you do with all other strategies. You get stopped out. Death by 1,000 cuts. Doesn't happen. Johannes, if you do manual drawdown control on the trade that the EA took, the trade name in the comments section changes. Would the EA still acknowledge the trade? Yeah. So basically, when you look at your trades, if you hover over your trades, you'll see, you probably can't see that, but it comes up and says order number placed by expert ID 24. Yeah. So this is a partial. Yeah. That is a full trade. That is a partial. So the way that it handles it is it opens a new order when it does a partial. So it closes a partial out, opens up a new order number for it, etc., etc. But it's still placed by the expert. So this is all still being monitored by the EA. If you do a partial close yourself, it will throw the EA's calculations out, or will it? No, I don't think it will. I'm trying to think. I'm not 100% sure on that, to be honest. You'd have to try that. But what I would say is, if you have got to the point where you've started to intervene manually, it's probably because you're doing aggressive drawdown control. If you're doing aggressive drawdown control, you have taken ownership of that position yourself and you have to manage that position. If it gets to the point where you've got to do manual trade management, you now need to manually manage that trade. Yeah. So like the pound New Zealand. Yeah. So this was doing its drawdown control, as you can see along the way. I got into it and went, I need to take this over. So I took it over, did aggressive drawdown control, and I basically then closed the whole lot out manually. So if you need to take it over, basically. You know, this is a good example. That's the EA doing its scale out thing, and just a bit of drawdown control, exit. Yeah. But when you get to the point where, you know, this wasn't particularly in massive drawdown. I think in this live room, I think we were talking about it, weren't we? Aggressive drawdown control. And I said, look, what I'll do is let's do it here. So I did aggressive drawdown control, not necessarily because the position needed it, but just to demonstrate how aggressive drawdown control works and how it gets you out, which it did. But from that moment on, because I had upset the equilibrium of what was going on in the position, I'm on it. I'm doing it myself. So, but this is what this is for, you know. And if you were to do a partial drawdown control, for example, on something yourself manually, and you look at your P&L, and all of a sudden you've got something there that's sitting in $550, and you're thinking, why is the EA not closed that out? Because normally it closes out at 0.5% for me. You would look at it and go, oh yeah, that's the one I did the manual thing on. All right, I'll shut it. And you'll just close it out, won't you? Don't forget, you're the trader. You're looking at this is your Bible. This is what you're looking at. you have to be on top of this column all the time, watching it like a hawk. That's your job. Your job now is not to trade. Your job is not to pick entries. Your job is not to do analysis necessarily. Your job is to let the EA get you into the positions and then manage the positions the EA's got you into, if necessary, or just let it do the whole thing for you until you need to get involved. Once you are involved, things will start to probably look a little bit different in here to what you would normally expect. At that point, you just got to use your head and go, that needs closing out. I've had trades where I've got into manuals because, like this euro US dollar, yeah? So let's say this euro US dollar gets triggered now as a short, yeah? If this afternoon, let's say we get down to there this afternoon, I have an emergency, I've got to go out for 2 or 3 hours, and what happens basically is it does that, yeah? I will get home, look at my P&L and think, what? Because this will be sitting in, I don't know, probably about $800 of profit. Normally you wouldn't see that on your P&L because the EA is told to get me out at 0.5% gain. So when I see that, I'll be going, the EA hasn't closed it out, because as far as the EA is concerned, that is all the movement we've got, and it's not enough for the position to be closed. However, my manual entry will have made us a load of money. So I will manually close that out. But if you're going to intervene manually with your positions, that you just got to, and this is the whole point of this Trade Manager dashboard, is so you can instantly see, right? Where are we? What do I need to do? I've got 0.38 today. Okay, I want to bank $500. There you go. Close these 3 out. I want to bank $500. Yeah. Bear in mind, that's going to go up to 6.5%. Obviously, you need to be aware of your actions when you close out some profit. Your drawdown is going to increase by the amount of profit that you close out. However, it gets you back to a nice break-even day. If you want to play the nice break-even day green thing, which I used to play as a little game where I didn't like to have negative days, but you soon learn that that's not possible. But yeah, anyway, there you go. Hopefully that answers that question. Afternoon, Joaquin. Morning, even. Morning, Miura. Morning, Tony. Got some bank earnings later. I take it a bad result will drop the indices. Got some bank earnings later. Have we? Morning, Lucas. I don't know. To be honest, I don't know what the bank earnings will do. Depends when they come out, really. Depends which banks they are. If they're US banks, yeah. What's the date? 14th. So we've got JP Morgan, Wells Fargo, Citigroup, BlackRock. Yeah, so these are post-market though. Oh, sorry, pre-market open. Oh, right, no, these are pre-market. Yeah, okay. Yeah. So depending on obviously what these are, if they're negative, those obviously indexes will be brought down. You have to look at the weightings though with these. So JP Morgan. It's going up at the moment. Yeah, JP Morgan are 20th in the Dow. So they don't have a massive so basically this is kind of a what they call a weightings table. So this is how much impact, you can see here the weight, how much impact these individual stocks have on the total index. So if, for example, you had something like United Health, who has a 10% impact on the Dow, suddenly having a massive earnings, and Goldman Sachs on the same day having a massive earnings increase. You've got 16% of the weight of the entire Dow wanting to push. It's going to fly. If you have something which is really low on the weightings table, like Intel, right at the bottom here, their stock price only affects the Dow by a 0.6%. So if they had a massive earnings, which was absolutely huge, it's only going to move it by 0.6% of a weighting. So the Dow's not really going to bat much of an eyelid to it. So when you look at things that are coming out today, like JP Morgan, they're back down here in 20th. So it's only 2.5% weighting. So it will have an impact, but obviously it's not going to be huge. So the ones, and this is why everybody trades these guys, the large cap stocks, because these are the ones that move the most. So that's why everybody trades your Intels, your Amazons and Googles and all that sort of stuff. But it will have an impact this afternoon, but as to what, we'll have to wait and see, won't we? Morning, Lucas. If you haven't said already, Olani, Charles. Morning, PM. Focus will be on the bank balances sheets, methinks, rather than actual earnings. Basically, how broke are the banks? Yeah, quite possibly. Yeah, I mean, this thing with the banks, isn't it? At the moment, what they're earning is irrelevant. Are they going to be able to remain liquid? That's the key. If we have a housing price crash, which is very much on the cards, that's really, really going to affect the banks, because the interest rates are through the roof, which is why they're making so many losses, because obviously they've given everybody fixed rate mortgages at 2%. Interest rates jump up to 5%, they're immediately making a 3% loss. Plus they're obviously a bit on top, but they're losing money on mortgages at the moment. So, and as house prices come down, people moving into negative equity, houses get repossessed, the value of the mortgages they lent on is less, and it all becomes a spiral. And then we have another crash. All good things to look forward to. Morning, Isabel. Right, let's do some extensions on the RSIs. So we've done all the AWRs. The RSIs, we've only got a few to look at. There's obviously some very obvious contenders here. Euro US dollar being one of them. So extended and embedded on the hourly. Have been extended and embedded now for pretty much 2 days. Absolutely huge downside targets to aim for. So really nice propulsion gap targets down here. We'll get a profit take move. There's 3 of them. At some point, we're just waiting for obviously the sellers to disappear, and then obviously the buyers will go, well, no one else is willing to sell to us, so let's get out, and that'll drop. So we're just waiting for the profit take move. Obviously, the catalyst this afternoon for that could be retail sales. So 1:30 this afternoon, we've got retail sales. That's potentially the catalyst for the US dollar strength to come through. We've also got Michigan at 3, but a lot less impactive than retail, obviously. So good opportunity for shorts there if you're not already in it. M5, you just had a reversal alert this morning. It's obviously in an accumulation at the moment, so you got a reversal both directions at the minute. But there's your M15. We're just retesting at the minute. So as long as that high remains valid, there's your reversal straight down. There's a nice 3-bar reversal pattern going in on M15 as well. Push, pause, pull. So it looks like it's coming down nicely. We'll see how we get on. So yeah, Euro US dollar extended on the hourly, also obviously extended on the 4-hourly. Last time we were extended up above the 80 level was all back here. Yeah, so that's what we're looking for. So it's exactly the same move, basically, if you look at it. It's just a normal push, profit take move, push, profit take, push, profit take, push. Yeah, so we're just waiting for the profit take back down into there. So that's Euro US dollar. Let's cover the other big ones. US dollar CAD. Pretty much the same as we've looked at the weeklies already. US dollar CAD and US dollar Swiss. So US dollar Swiss, very nicely extended. Again, same thing. big strong push, big extension, profit take, big strong push, big extension, profit take. There's your targets to the upside. So that looks good. US dollar Swiss extended on the hourly as well. We've just come out of extension on the hourly. We've had 2 extensions here. Yeah. So looking for pullbacks up into here. We've also got that propulsion gap up there, which is miles away. That's the main one, I would say, 175 ADR. That's going to be pretty easy to get to at some point next week. However, retail sales could be absolutely phenomenal for the US this afternoon, and we might get 175 today. So you never know. We had one this week already. Why can't we have one today? US dollar Swiss and US dollar CAD. That's just coming out of being embedded. And we got down to 9.8. So that's the lowest RSI reading we've had for a long time on the US dollar CAD. I mean, we haven't been down here for ages. This is probably the biggest drop we've had for a long time. So that was the last extension to that level we had. We had a tiny little pullback on it, and then we put in another equidistant move before the profit take and the rally. So yeah, nicely extended. We looked at this one because it's on the weekly list as well. So there's your support. So if this level doesn't, if where we are now with this extension, they don't do a profit take. So the scenarios are obviously the same as that. We're either going to get that or we're going to get that. So either if you're in it now, that's your exit. If not, another entry and an exit there. My average on this is terrible. I've got 4 positions on this. My average is here at the moment. So very difficult to get out of at the minute for me. But it's not at the point, you know, looking at it from a an extension perspective, it's only still in 1% of drawdown. So it's just been hemorrhaging a little bit of cash along the way, but it's not in any shape or form a worry at the moment. So when we get down to here, this is where I would consider aggressive drawdown control on this. So we're in 4 positions. When we get to 4 or 5 positions, you know, you've got to admit, yeah, no, this was the wrong trade. We got in just at the time the US dollar was having a bit of a bad run. So 4-hour RSI extension. If you look at the pullback there, didn't manage to get out on that one. So we're now massively extended again. Look at the extension on this. We're way below the 20 level. We haven't been down here for a long time. Very, very weak, this US dollar. Very similar to that move there. Yeah, that's the profit take that we're looking for. Yeah. Yeah. So we're just waiting for that that profit take move to kick in from the banks. So at the minute, in one here, if we pull down into this area, that's where I would get aggressive. Aggressive drawdown control on this would be executing somewhere in the region of a 0.7 to a 1.5 long, so a 1.4. So an ADR hit, another extension will bring us back down on RSI. That will also probably give us RSI divergence, because what we'll have is if price pushes down to there, we'll have price dropping. RSI will be sitting down here somewhere. So that gives us bullish RSI divergence. So that would be a spot on spot there for limit orders to trigger from that previous support. ADR and RSI extension, multiple confluences to give me the confidence to go in with an aggressive position. That aggressive position will bring the average right down and give me an exit very, very quickly. That is if this drops, and it's going to need retail to be quite bad for this to drop down to that level. But when we get to that level, the limit orders are going to trigger, and we will get some kind of bounce. Whether that bounce turns into a pullback or even possibly a reversal, or whether it just turns into that sort of movement, I don't know. Deal with it when it gets there. So that's nicely extended, US dollar CAD. So that's US dollar CAD and US dollar Swiss, and we've covered Euro US dollar. The other big one is the Aussie US on the hourly, on the 4. Whoops. So the 4-hour RSI extension there. I need to draw my lines back on here. It's because I changed my template. Just put those on. So nicely extended above 75. Why is that 70? Why is that 26? I just put 25 in there. What? Oh, I'm putting the name in. Wake up. Ignore me. Okay. So yeah, extended above 75. That's also a lovely resistance bounce look. So straight up into resistance. Huge, big, strong move, multi-day move, all the way from RSI extension to RSI extension. Very little profit take in there, more for like flag breaks than profit takes. So looking for a decent pullback on this move at some point, probably down to ADR. If not, there's no problem getting down into that at some point. If it does break out higher, i.e. we get negative US dollar news this afternoon, we'll be heading back up again and out of that level. So you've got a level here potentially and here potentially, which could possibly act as resistances on the way up. Oh, it's about to black. So we've got these two areas there. That one's pretty much just that gap fill, isn't it? So it's more likely we're going to head up to ADR and get some kind of bounce somewhere around this area here. Yeah, that area has been used a lot in the past as a support. So from there, yeah, so from there basically, so it's this area from here, there, 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 there. Yeah, very supportive area, this. Previous resistance, turn support. So somewhere up 125, 150. If it gets there, I mean, if it gets there, basically you're looking at that kind of move again, aren't you? So again, you'll have RSI divergence. It's just all ready to come down. If it hasn't come down from here, basically more bad news. We're going to get that sustained push, and then we'll get a bigger, stronger pullback. The more the elastic band gets stretched, the faster the snapback and the more aggressive the snapback tends to be. So that's Aussie dollar, US dollar. So that's all your real big extensions. That's extended on the 4 hour. Again, same thing. Yeah, we're looking for just the profit take move to start. Yeah, so we're just looking for that pullback or reversal, one or the other, isn't it? We don't know. You never know. That's the whole point. We never know whether it's going to be a pullback with mean reversion or a reversal. Doesn't matter. As long as you've got enough room to get out on the pullback and it is just a pullback, that's all we need, isn't it? Adept, how does the yen pairs look? That's a bit of an open question. How do the yen pairs look? Like that? I don't know. They're all buys. Everything is a buy. Everything is a buy. So yen down. So buy everything against the yen. From the buyer scorecard perspective, everybody and their wife at the moment is shorting the yen. So I would say the yen is probably going up at the moment. Or has been, obviously. Don't know. There's nothing really on my radar on the yen at the moment. So Swiss yen and New Zealand yen are the only two yens really that I would be interested in. We'll cover those next. So Swiss yen, I've got shorts on already. I'm at break even on this one. Target is that propulsion gap. So that was an extension on the 4 hour, which is just coming out of extension now. So entry anywhere up in here basically over this period. and waiting for that pullback down there. Big, strong extension to the upside, looking for that snap back down again. So nice mean reversion opportunity on that. I've got 2 positions on that at the moment. Done 1 scale out. Yeah, so initial entry was on that extension. We got embedded, sat sideways. We had this big, strong push from the Swiss franc. So scaled out, took a second, average is there. So any kind of drop today, break of the Asian lows and challenge on yesterday's low, which is there, and I'll be out of those too. However, this is the obvious target at 150 ADR. So nice opportunity there on the Swiss yen. The New Zealand dollar yen is the other yen that's extended, or was extended. That's coming down. Yeah, and just missed that entry. It's another good example that didn't pay attention to this. It's a bit aggressive, this color, isn't it? This might change this because it's a little bit in your face. What should we go for? That's a little bit cooler, isn't it? So we've got this resistance here. There's an area that is potentially going to get pushed into. We've got this propulsion gap, which we're aiming for at the moment, and this one down here. And we've got this big one down the bottom, which is way beyond 175 ADR. So it's a tricky one, this. I've got an initial position on the extension. We've just taken a second extension, which I've scaled out of, and now it's starting to come down. Didn't get a second position on because ADR on this is 87. The push so far has only been 70 odd pips. So it's not enough to get me in to a second entry. So what I would like to see today is a test on this high and a break of that high. And then some kind of pullback down into this propulsion gap down here into the lows. We've got this little bit up here as well, which is potentially still in play. It's quite an old one, going back to March, beginning of March. Euro pound is an hourly extension on our side as well. So there is an opportunity for them to sort of rally all the way up to there, in which case that'll be sort of 2 or 3 positions on and then wait for a pullback. But equally, they may well come down and do this. You can see, obviously, this has got no directional bias at all at the moment. It's literally completely range bound. So we're bang in the middle of the range at the moment. So 50-50. Is it going to go up or is it going to go down? I don't know. So at the moment, I'm short, looking for it to come back down into this one. If it doesn't and it goes up to that one, I'll scale in and get out when it's finished doing that move. But that's extended at the moment on the 4 hour. So opportunity to get in short. So that's the yens covered. The euro pound's just lit up, isn't it? So look at that. Excuse me. So euro pound, it's extended on the 4 hour. So big, strong push. We had a nice flag in there and a push. That propulsion gap now is completed yesterday. This is the target at the moment, which is 175 ADR. We've tested this twice. It looks like this is where we're headed. So I've got 1 position on at the moment. Sorry, 2 positions on at the moment. Short. We've got this high at 125 ADR today. So if we can get a rally up to 125 ADR today, I'll be into a 3rd position up there and wait for pullback. Targets to the downside. That's probably filled and done. That's tested, very small. That's where I would say we're headed. But not sure if we're going to need to go up or down on this. So that's your ultimate high in the range at the moment. This is your sort of intermediate area. So any push up into ADR, 125 ADR area on that one, that'd be a good 3rd short. And ADR on this is 38. That is 36. Again, going to need to keep an eye on this. I'm not liking, to be honest, this 1 ADR distance. Since I set this set file up with 1 ADR, what I'm finding is we know that price moves within its average daily range 58% of the time. So when you think about the setting of scaling into positions 1 ADR apart, what you're actually saying is scale me in on the minority of days, because it spends 58% of its time price sitting within its average daily range and 42% outside of its average daily range. if it has 3 days where it stays within its average daily range moving up, it's quite hard to get in to a position that is going to be strong enough to give you a snapback, a pullback, profit take. So what I'm finding is we're getting a lot of flags which don't hit target and push and don't get you into another position. So I'm kind of considering and thinking of reducing it to 0.75 ADR. That would get you into all these trades that I've shown today, like this one as well, and the Euro US dollar. I'd have been in yesterday on a 0.75 here with a second entry already. But with a 1 ADR, I can't even get in today if this reverse alert kicks in on the hourly. So it's becoming, now I'm seeing this set file play out. It's working absolutely fine, obviously, but it's just, I think there's slight areas for improvement, and the spacing on the ADR is one of them. So I'm going to keep an eye on this, but I'm thinking of changing it. In fact, I think I just have on the EA account. I think that's ADRs. Did I change that? I can't remember. No, I've left it at 1 ADR for the moment. All I've done is I've changed the scaling, the targeting on it to be more aggressive. But yeah, so tricky. Anyway, things to worry about. Euro pound. So yeah, Euro pound's pushing up, obviously, at the moment. Good opportunity for shorts, nicely extended on the hourly still, but it's pushing very, very hard, this euro at the minute, and it will probably continue to push hard, the euro, because obviously we've got the news now that we're getting a 0.25 to 0.5 increase next interest rate rise. So we've looked at the Swiss yen, euro yen has just got extended. We didn't look at that one. Oh, it's a 4 hour. So there's a 4 hour extension. I'm in on the hourly on this already at the moment. So coming down very nicely in a minute out of that RSI extension. So you're probably already in this. If you're trading the 4 hour, you're in it already anyway. If you're trading the hourly, you're probably in it as well. If you've got it set up to run on this, obviously. So multi-day push. We've had another push. Yesterday was our first pause day. It was ever so slightly bullish, but basically it was doji, and it's starting to come down. So these are the targets on the way down, lots of it. So take your pick. That'll get me out ADR today. So that's already coming down. You've missed the entry on that. Oh, no, you haven't. Yes, you have. So you've missed the entry on that. The entry on that was in Asia here. Pound Swiss extended on the 4 hour. So again, nice big strong push down. 4 hour RSI extended and embedded. We're getting quite a lot of stuff that's getting embedded at the moment. Big strong moves going on. Mainly this Swiss franc is absolutely on fire at the moment. It's just flying. So areas of interest on this obviously are way down here at 200 ADR. We're nicely extended, waiting for some kind of profit take move on this. We get these nice little flags coming in at the moment. Yeah, which seem to be breaking to the downside. No decent profit takes. So we're looking for that kind of movement, obviously. So it's still pushing at the minute, just waiting. Nice big propulsion gap target there. A little bit far away with the ADR on this as well. 1 hour RSI extension is just in on 30. So if we take out yesterday's low and continue to push down, as you can see, which it is at the moment, you see the ADR moving down, obviously. But this is a good example of how ADR works and how ADR moves. So ADR is measured from low of day, the distance of ADR, which is 75 pips in this case, back up to the upside. So that's your ADR hit to the upside. So that would be a hit of its average daily range. So its average daily range is measured from high of day to low of day. Yeah, so 75 pips is from the low. So you've got a lovely profit target here. I'm a little bit far away on my average at the moment on this one, but that looks pretty good for entries as well. But that's you're probably already in that one because the Swiss franc has been absolutely pushing like crazy. Pound US dollar is a 4-hour extension, or was a 4-hour extension. Your reversal is just going in on that on the hourly. Your 15-minute, you've already had it this morning in Asia. So back to break even on that one at the moment. Obvious target is there. Got one here as well. So if you're targeting half an ADR and you got in yesterday on the reversal alert, 47 is half an ADR. So half an ADR basically, target is 1 ADR today for me on that one. New Zealand dollar, US dollar is the other. Extended to the upside, hourly, 4 hourly, big strong push, parabolic. We had like 12 hours parabolic on this weakness. So in on one. Yeah, so that's the reverse. Look at that. So the whole of yesterday, we got extended on the RSI here yesterday, yeah. So for the whole of yesterday, we didn't get a reversal alert until right at the end of the day. So that just shows you that whole session yesterday from middle of London all the way through New York was parabolic. Utter crush of the US dollar. So it's left these whacking great propulsion gap targets in play. We've run straight into the sellers here, which is where we stopped. We tried again this morning. We failed M pattern reversal. Divergence on the RSI, big strong bearish divergence on RSI. So good looking entry. M15, you've had your entry, as I said, this morning. Oh, sorry, your entry was yesterday, which is where I got in. So yeah, right now is exactly the entry that I took yesterday. Thanks for the follow. Hung, can't say your surname, Hung, sorry. I'm just going to have to call you Hung. Thanks for the follow, welcome aboard. So yeah, there you go. So there's New Zealand dollar, US dollar, nicely extended on the hourly. Just coming out of extension actually on the hourly, but extended now on the 4 hour as well. So again, same thing, big extension, looking for the pull back down again. The usual stuff. Everything covered. There you go. John, quick one. Looking at your funding page, I see my Forex fund allows EAs on funded accounts. Do they allow for evaluation? Yeah, that EA on here. So when you're looking at the funded page on the website, that allows EAs full stop. Yeah, so there's no differentiation. If they allow EAs on evaluation, they allow EAs on funded. They don't say you can use an EA to get past and then you've got to trade manual, or you can trade manual to get past and then you can use an EA. It's either it is EAs or it isn't EAs. So basically that means you can use EAs full stop. There's no difference between evaluation and the other. I want to buy the ADR EA. You mean the market reversal alerts EA? I haven't got an ADR EA, but the market reversal alerts EA does it all. So that's the EA that does everything basically. God, my website's really slow today. So yeah, so that obviously trades all the strategies basically. Play Salty Games. Morning to all Salty Ninjas out there. Morning, morning. How are you doing? Has anybody got anything else they want to look at this morning? I'm going to look at oil. How's the Dow doing? DAX even. Oh my God. That's a stop out, isn't it? Not fun this morning. So 2 losses this morning on the opening range breakout EA and a break even. Well, that's actually a tiny profit, but choppy open this morning. US dollar's pushing. Either that or the New Zealand dollar's coming down. No, this is New Zealand dollar weakness by the looks of things. Yeah, New Zealand dollar's weakening. The Aussie will probably coming down as well. Yeah, Aussie's coming down with it. Usually they both do the same thing, those two. That's going to really help with the drawdown. and hopefully bank something. Euro odd long, so that should be going into profit as well if the Australian dollar is coming down. All looking good. Oil, I was going to look at, wasn't I? Trying to remember what I was doing. So, oil yesterday, we had a slight pullback. So, as you know, on the Fiedel Crest account, if you were in here before, I was short on oil, looking for this gap fill play and didn't get it, basically. So we got the breakout of the high on Wednesday. Big, strong push. This was on the oil inventories. Actually, it was just before the oil inventories, and then it continued the break after the oil inventories. Yesterday, all we did was kind of flag, and we're coming back down again today, back into the propulsion gap. So this is a really good looking buy. So depending on your bias on this at the minute, yeah, what we're seeing is the high after the gap being tested and then broken with a propulsion gap. And then we are pulling back into the propulsion gap where the buyers started the next leg, and they are starting to buy again. So right now on oil, we are a propulsion gap test at support, which is a beautiful buy opportunity. That is if you are of the opinion that this gap is not going to get filled. If you're of the opinion that gap's going to get filled, that high shouldn't get invalidated, and we're going to do that. And then we're going to break that and collapse, which is like 4 ADR away from where we are at the moment. So the risk reward on this short is phenomenal. Yeah, so it's a 3R gap fill basically, and stop obviously up there. Or if you want to go super tight, use the stop above the Asian high today. And then you're looking at a silly R, aren't you? Some kind of silly R. I'm going to need more than that, aren't I? Going to need 6, I think. It's more than that. It's 7R. So yeah, that's 7R down there. So really nice opportunity. Depending on your bias on this, as to which way you think this is going to go. I'm completely torn on it. I really don't know what to do with oil at the moment. So obviously the forecast, as we keep saying, is $95 a barrel. That's the current interim forecast before higher levels. There's lovely targets to the upsides on the way. And so that is a legitimate move. This is your peak formation low. Your market structure is now in. I was waiting for that to get in, and obviously I didn't get it because it just gapped. So that market structure from what you see here is potentially what I think could happen. However, we've just broken that high, and we've broken that high into this propulsion. Yeah. So we've just taken these highs out, and this is why these sells are coming in now, because the limit orders are triggering at that level. Is there enough to push it back down? So your leg would be kind of that. That's the question. So those are your two options on oil as to which way to go. I'm really tempted to short it still, just because gap fills get, just because gaps get filled. We know gaps get filled. It's an inefficiency in the market. There's a lot of traders, institutional traders, caught offside on this, and they will be wanting to get the price back down here. However, it's not the sort of instrument you can manipulate because it's a commodity. It is driven by supply and demand. Supply has been dramatically cut. Demand is increasing. Therefore, price will increase. So it's very hard for a case to be made for that gap fill at the moment, with what OPEC's been coming out and saying about the barrel, the demand increase being over $2 billion, 2 billion barrels a day more, etc., etc. Everything is going up price-wise. So this is a perfect little buy there. Stop underneath the propulsion gap. in obviously support rectangle there. And off we go. However, that leaves in play these propulsion gaps as well. So it's such a tricky thing to analyze at the moment, but I'm undecided, so I'm staying out. But it looks good. You could, in fact, with this, you could put a hedge on this, I reckon. If you went with a pending order under the low and a stop above the high there and go for the gap fill 3-1, if that works, brilliant. If it doesn't, take a breakout of that high with a stop underneath this low, which is where we are seeing the breakout and the propulsion gap holding, and then look at a 3R return to the upside. That's going to be way before $95 a barrel. So you could literally put 2 orders in the market now, sell order, buy order, and just bracket yesterday, basically. And whichever way we go after yesterday's pullback, I think is probably the way forward, isn't it? So look at it on the daily chart. What we got was a large push and an inside bar. So you're looking for an inside bar break to the upside, or you're taking the inside bar break to the downside. Inside bar break to the downside is the gap fill. Inside bar break to the upside is next resistance, which is here. So either way, you've got somewhere in the region of a 3 to 4 to 1R. That's the way I'd play it. But I can't be bothered to hold anything that long, so not for me. I need to be in and out faster than that. I haven't got patience. Morning Shroud. DAX has just come back down into inside range, inside the opening range. This thing's a dud today. Hasn't got a clue where it wants to go. Looks like we're probably getting some US dollar strength, though. Yeah, bit of US dollar strength coming through now. So Euro US dollar is probably coming down. Yeah. See what happens. This is all buying ahead of retail. Flame. This is gold. That's gold. It's shiny. It's yellow. You can make all sorts of things out of it, including Lamborghinis. You can also make jackets, coins, all sorts of stuff you can do with gold. I'm trying to keep a straight face. I can't do it. Gold's coming down. The US dollar's going up. If ever you want to know what to do with gold, right? There's 2 ways you can identify what to do with gold, yeah? If the indices are coming down, short it. If the US dollar is pushing hard, short it. If the opposite is true, long it. That's all I can say. If there's a run for safe havens because the banks are collapsing, buy it. If a world war kicks off, buy it. That's about it. Gold question mark is a very broad question, isn't it? That could mean all sorts of things. Sorry, sarcasm over. Reset. 1 sec. I just want to quickly check on something. Where's clicks gone? There. Okay, great. Sorry, just checking on something else set up. Right, that's it. All what I've got for you today, this morning. Unless anybody's got anything else they want to look at, anything else they want to discuss, let me know. I will just be monitoring everything today that I've got running and basically see how the day goes ahead of 1:30. So this is what we're building up to this afternoon. Retail sales at 1:30. So when I come back on at 2:20, we'll obviously have a look at how that's gone. Get ready for UOM. New York Open might be a bit flat. I think that's really going to depend on how much movement we get off of retail sales as well. So be prepared for potentially a nasty little open as well with New York. So 15-minute opening range or that 5-minute pre-market might be a good one to do. Yeah, retail sales basically is the core today. If the market has put in a big strong movement off of retail, i.e. the indices have done ADR or close to an ADR, that's when we tend to get quite a quiet open. So I will assess that when we come on at 220 and see whether or not it's worth taking the opening range breakouts today. I might not do, because we've got news half an hour after the open and we've got a hell of a lot of news before it. So Shroud, New Zealand dollar Swiss you want to have a look at? Let's have a quick look at that one. Kind of moving in the middle of nowhere at the moment. So, I mean, at the minute, obviously, we've got a very strong Swiss franc, which is why this is coming down. That's what I would see. That sort of movement. So my average is here. So I'll be looking to get out up here. Somewhere around ADR would be lovely. Obviously, everything's got the potential to move off of retail. Doesn't tend to move as much. All the other currencies don't tend to move as much on US dollar retail as they do on other US dollar news. So I'm not sure we get a massive movement off of this, but yeah, little bit of weakness in the Swissy is what we're waiting for. But the Swiss franc's been really strong for the last few days. So for the last few weeks, really. But I'm long at the moment. Right now, it's bang in the middle of nowhere. So the long entry was here and here. And all we got off of that first initial entry was a sideways move. And now off of that one, we've had a sideways move. So it's literally just push, accumulate at the moment. So this propulsion gap here, if we get a nice bounce out of this break from yesterday, that's where I would look to get out. In fact, that is where my exit is, which is 30 pips. ADR, basically. So ADR today is 30 pips on from my average, which is my exact exit. But it's Friday, so I'll basically on Fridays monitor the P&L. Anything you've got green that's worth banking, bank it, because if it's going to gap over the weekend or do anything stupid, it's better to have it in the bank and realised profit. So I'll see where we are with that this afternoon. If we're kind of hovering, you know, sort of around here towards the close, I shall just close it. If we're obviously down here somewhere, I shall hold it. Right, that's it. So that's all I've got for you today for this morning. I'll be back at 2:20 this afternoon for the New York session, and we'll obviously have a look at how the news has affected everything. Look for pullbacks on this DAX, anywhere in that propulsion gap for shorts. But this is a pig this morning. Not really deciding to go anywhere, is it? It's looking fairly similar to yesterday's open. Not really interested, is it? But that's the downside target. And there. Holding up this low. See what happens. But if you fancy it short, there's your 15-minute break to the downside just gone in now. No, not quite. There's your 15-minute low. So that would be your break of your 15-minute low. Right, have a good morning. I will be back 2:20 this afternoon for the New York session. Anything you need, let me know. I'll be in the Telegram group. Other than that, have a good morning, and I will see you guys later or Monday at 7:50.